Well, hello everyone. On behalf of Silver Hill Funding, I'd like to welcome you to our first webinar for 2019, Sourcing Leads in 2019, the Mortgage Marketer's Guide. We're going to have some great information for you today. Let me do one other thing before we get into it. I want to, first of all, let you know that use the chat box for any questions that you have, and we'll get to those at the end of the webinar. But please use the chat box. And I also want to take a moment, first of all, introduce myself. My name is Ski Swikowski. I'm the Vice President of Business Development. But I'm also joined with our Vice President and the National Sales Manager, Juan Barcelo. Juan, are you there?
Hey, Ski, how's it going? Hope you're doing well today.
I'm doing well. The only bad thing is I left Fort Lauderdale on Monday and came back to Philadelphia, which is about 60 degrees difference, I think. But I know you guys have some great weather down there. You're down there in Pennsylvania.
Just to give you some comfort, it's rainy and cloudy today here. So
good. I'm feeling better already. Okay. So let's do this. Let's jump in and talk a little bit about our agenda for today. We're going to talk about the small balance commercial borrower, kind of an overview of them. Also get into lead sourcing and some ideas that you can utilize in the 2019 to get more business, at least to get the leads anyhow. Then Juan's going to spend some time talking to you about our Silver Hill solutions and how to get started with Silver Hill if you're not already on board. Okay, so let's talk about that small balance commercial borrower overview. Well, based on some information we got from the MBA, it was a great year last year, 2018. It was a very strong year for lending in the commercial space. And we're looking forward to an awesome year this year as well. But one of the things, the sentiments that we are hearing is that originators are still struggling to source business. There's a lot of people out there that are looking for ideas. And if you look at this slide that I have in front of you, these are real questions or pleas, if you will, from some of our webinar attendees on, hey, show me how to get some business. Show me how to get these types of deals. How can I locate these opportunities? Give me some marketing ideas. So I'm sure there's a lot of people on this call right now that have some of those same thoughts in their minds, and we wanted to put that up there to stimulate your thinking as well as we move through this. Now, to get started, the first thing we like to do is kind of find out what kind of audience we have in front of us. So Zach North, who is our marketing director, is on here as well. He's going to put up the first poll question. Zach, you want to post that one?
Hey, Ski. Sure. Our first question. How many commercial multifamily loans have you closed in the past 12 months? I'll give you a few seconds to answer that one. All right, let's give a few more seconds here. Okay, Ski. So it looks like about half our audience is new to commercial lending, and the other half have closed about one to six, I would say. So we have a mix of maybe new people and some experienced commercial brokers as well.
Okay, great. That gives us a good idea of how to speak to a lot of these things, although I'm going to tell you the comments that we get are not just from new people coming in business, but from experienced commercial brokers as well. Now, this Seth Godin, I don't know if people are familiar with Seth Godin. Here's a quote from him. He said, "Don't find customers for your products, find products for your customers." Well, he's got more books in publication than I do, so I'm not going to question on that, but I am going to make a comment. I would say, don't find customers for your products. Find solutions for your customers. And that's really what we're going to talk about today. So you're going to be doing both. We're going to be talking about how to find the people, and we're also going to talk about the Silver Hill solutions that you're going to be able to provide for them. So, common small balance commercial borrower characteristics. There's a few things that you want to be aware of. The people you're looking for, they are looking for financing between $100,000 and $5 million. And I'm going to tell you, in the small balance commercial world, and for many of the banks, that's really probably up to $2 million, under $2 million. The banks like to see the things over $2 million. To them, small balance is even under $2 million. So the other thing is you're going to be looking for people that have a regular need for refinancing solutions. Now, we're going to get into another slide later on about reasons why people are looking to refinance. But in business, again, it is a business, so they're constantly looking at financing and opportunities. It's not exactly as it is in the residential world where you're buying a house or you're refinancing maybe to pay off some debt or take advantage of lower rates. There's a lot more opportunities because of the dynamics in the business world. And then you're also going to notice that there are a lot of diverse property types, from your multifamily all the way to the office buildings, retail space, mixed use, warehouse, industrial, commercial, special purpose properties. There's a lot of different property types that make it very interesting as well that people are looking for. And then often they're looking to have an expedited closing. I'm not picking on the banks, but the banks typically take longer because of their processes. And a lot of business people are looking to close quickly. Maybe they're trying to purchase a property. Maybe it's an investor looking to pick up a great deal on an investment property, and they need to close quickly. Also, you're going to find that the borrowers and the properties sometimes are challenged. That's very common because these are storied loans that we typically see in the business and investor sector. So we're constantly looking at different nuances of their situations. And then part of that is that last bubble, and that's people are somewhat, say, at times not willing or not able to provide documentation that is needed by your traditional lenders. That's very common in the small balance commercial world. So let's move into the lead sources that we're going to talk about and how we're going to get after these types of things. Now, there's two main areas that we're going to talk about. One are what they refer to as push tactics, and the other are pull tactics. Now, the push tactics, these are the outward efforts that you make, where you're actively looking for and trying to connect with people through your ads or through networking efforts. On the pull tactics, you might also refer to them as attraction marketing, if you will, where you're trying to draw people to you and get them into your sales funnel. Either way, you need to be looking at doing both of these to get leads into that sales funnel, especially in the current world where people are really looking. They want to buy. They don't want to be sold. So the big move has been towards that pull tactic marketing. All right, so let's look first of all at the push. Now, the first thing that we want to talk about is networking. This, for many of you, is probably a really popular way for you to get your business. So as we look at around this wheel, the networking with your CPAs, financial advisors, the banks and credit unions, and we're going to talk about that on the slide coming up, but this is one of my favorites. I personally feel that this is an awesome source for business, your banks and your credit unions. We'll talk a little bit more detail. Social media platforms. Now here, we're not talking about a pull approach. We're talking about using things like LinkedIn to identify people and to connect with them and build a relationship and take a much more aggressive approach to it than, say, posting an article in LinkedIn. You also have, by the way, you still can do somewhat the same thing in Facebook and Twitter and other platforms, but we're talking about a more one-to-one approach. Here on the lower left-hand side, the real estate investment groups. This is a great one. Perhaps in another webinar that we do in the future, I'll talk a bit more about that. But there are two main real estate investment groups that I would encourage you to check out. One is the National Real Estate Investor Association, and it's nationalrela.org. And the other is the Real Estate Investment Association, and that is rela.org. Both of those are big national organizations that have chapters all around the country. I would encourage you to Google those, check out Real Estate Investment Associations, and you'll find them. And find out if there's a chapter or chapters in your area. Another great one is go to Meetup. And they have different categories. Go to the business and career area and click on that. And you're going to find out that it's going to start showing you things in your area, Meetup groups. There's tons. I'm in the Philly area. There's a ton of Meetup groups around real estate, like you wouldn't believe. So do that type of research to find how to get after some of these real estate investors. And then there's the real estate professionals. The realtors, the appraisers, the title companies. You want to be able to do some networking. They can identify a lot of these people for you. And of course, your existing client base, your existing customers and even past customers. Great way to network. Be sure that you're asking, whenever you talk to these people, you're asking for referrals. Because also remember, your business owners, no other business owners. And your investors, no other investors. So,
hey, Steve.
Zach, yes.
One thing while Zach puts up this question, we did have a few people ask about the presentation. We will be sending the presentation once we're done, probably tomorrow, right, Zach? So probably tomorrow we'll be emailing it back out to everyone who attended. So there were a couple of questions on that. Okay,
great. Great, excellent. Yeah, you'll have a copy of this so that you'll be able to see those, or you'll hear those real estate investor associations. And I tell you, it's great for you to start going to those meetings and also bringing somebody along. So if you got a realtor or someone like that you do business with, if you're doing residential business, bring them along so that they start going to those meetings. You'll get a few extra brownie points that way.
Yeah, great, Keith. So you already have a lot of responses here. The next question is, which channel helps you generate the most leads? And we're seeing overwhelmingly that it's business referral relationships. Second being client referrals. We do about 10% with social media channels as well.
Okay. Yeah, that's growing. It's still, I know that's a small segment, but I think the key that we're going to get after on this one is that we want you to start thinking outside the box a little bit from what you're currently doing and looking for other ways of attracting business. You certainly can get better at what you're doing, but there's also other things that you can be attempting. All righty. Here we go, talking about your referral sources, and a lot of you get your business this way. Now, we do have a big segment of our audience that are residential, perhaps, and they're going into the commercial side for the first time. So think about this. You've already been doing business with some of your clients who are, in fact, self-employed people, professionals, real estate investors. You did their residence. But now you want to start to look at them as another opportunity for commercial business. So if you check the real estate owned section of the 1003s that you've taken, or you look at what they do so that you're aware who's self-employed and who the entrepreneurs and investors are, you can start targeting them. We're going to talk about segmenting shortly, but being able to identify them in your database so that you start sending special messages to them. Now, for those of you that are already commercial brokers, you want to continue to stay in touch with those customers that you've already done business with, both current and past customers, and be asking for referrals. That's a big one. I think a lot of people forget to continue to ask at all stages of the transaction for referrals. I mentioned banks and credit unions, and something to keep in mind here. They are a source of commercial financing as well. But now where they give you the best rates to the clients that they want to do business with, they are also a bit tougher on their lending standards. They turn down at least 50% in most cases of their business. I talked to one bank, which will remain nameless, said they turned down probably 80% of what they see. So you know that these people are seeing commercial loans. These are a great source of business because they can't do them all. They're not, as I said, they're turning down 50%, and they don't want to lose that relationship. The last thing they want is for that person to get turned down by them, drive down the street, and go into their competitor and get the deal done. So that's their motivation. So as you reach out to these people and start making contact, as you're into chamber of commerce functions or other business networking functions, seek out those bank loan officers, right? Because these are, and I'll tell you something, a lot of them are SBA lenders. And SBA turndowns great source of business. But just in general, looking for the turn downs that they have, they're like pre-qualified for you almost. Okay, Facebook lookalikes. Now this is a little bit different for maybe some of you. You may be familiar with Facebook, but you're not thinking of it as a avenue for you to develop business. Facebook allows you to target very laser-like on people that you want to attract. So if you have a database of people, and you're going to have to build a spreadsheet to do this, of ideal prospects, you can put that into, you can upload that to Facebook, and you're going to tell it what metrics to look for. It will go in and find people. So, you know, location, age, interest, as it says there. But it's going to go in and identify people who are like the people you're doing business with. And it's going to send targeted ads just for those people, all right? There's a link there, as you see below, that you can start doing a little bit more investigation on that. But this is a great way to do some targeted marketing after people who are similar to people you already have done business with. Okay, I mentioned segmentation. I think this is really, really important. First of all, I want to say that building your database is maybe the most important thing, to continue to grow your database. A small database is going to limit your capabilities. So as you grow your database, you do want to segment them. This is a great strategy right here. As you hopefully are sending out emails on a regular basis, you can segment them this way. So there's people who are just unengaged. They have not opened any of your emails. And then you're going to have some people who are opening your emails, but they just have not called you up and have not done any business with you at this point in time. Then you'll have some people who actually have already, maybe they got their first transaction with you. And then there's the people who you want to retain, who you may have done multiple transactions with. This is very similar to the way that we approach our business at Silver Hill. So this is a great way to segment, because the key is for you to send messages to these people that resonate with who they are in the buyer's journey in the funnel, because you don't want to send the same message to the person you're trying to retain. You've done multiple transactions. Maybe you're sending a thank you. You're not going to send that to the same person who's not even engaged with you, right? So just keep that in mind. This is a great way, a great system for you to use in going after your different audiences within your database, but you need to identify them first. Okay, let's take a look at the cold tactics. Here we go. Publishing on LinkedIn. Now, something you really need to recognize. For all the people that are out there in LinkedIn, there's over 500 million users. This is a great way for you to be able to do business. You know, this is a business-to-business social media platform. But when compared to everything else, LinkedIn is by far and away the best way to get leads. Now, I'm going to warn you also, you don't want to be connecting with people and right away trying to beat them on the head to get business. You're going to get unconnected very quickly by a lot of push, sell type of tactics. You really need to get a relationship with them. But realize that when you do use LinkedIn effectively, 46% of all the social traffic out there for driving to your website, to your corporate website, will come from LinkedIn. It's huge. So doing this effectively is really a great idea for you to develop your business on the pull side like this. And publishing content is one of the first things you really need to be looking at doing to be able to drive leads to your website. And as indicated there, take a look at this. There's only 1% of that 500 million that are sharing on any consistent basis, in this case, weekly. And even smaller, 0.2% of that population have ever published an article in the LinkedIn platform. That is minuscule. So you can look like an authority if you start putting articles out there, especially around the commercial subjects that we're talking. And by the way, we are a good resource for that for you. You just need to check our marketing section of our website. And continue with LinkedIn. A little bit of research that Zach had done for us, and he found out that as you start to put content out there, how-to articles or lists for your posts are very popular. And ironically, everybody talks about how to keep things short and sweet and not to get too wordy. The fact is, the longer posts perform better. So 17 to 2,100 words. A lot of people say, "Oh, keep it under 400 words." Well, apparently people like to read long articles. So you want to test, perhaps, but there's a little bit of evidence from okdork.com. And also looking at the titles. 40 to 49 characters gets the most views. So LinkedIn is, as I said, a great resource. And when you're starting to get involved in the groups, the LinkedIn groups, you want to start putting in posts in there. But notice what that last line is. Questions have been extremely popular in generating leads. So asking questions to get people engaged with you in those groups is a great strategy for LinkedIn group involvement. All right. Now, I'm not quite sure if any of you are really aware of who's coming to your website, but do you really know who's coming to your website, checking you out? And what are they doing there? What are they checking out? How can you make this more effective for you to get leads? One of the things is Google Analytics. And you just need to check this out. I know there's some people here may be tech-phobic, but Google does a great job of doing a lot of this for you. So you can go and check out Google Analytics and go to the Behavior tab. You're going to see it. I'm going to show you a picture of that in a minute. It's going to show you where people are going on your website because you want to know that. You want to know what they're interested in. And make sure that you are identifying those areas so that you can now start utilizing whatever you're going to write about or whatever communications you're going to have with them. You're utilizing that knowledge that you have. One of the big ones, this is a great tip, one of the places that people go most is the About page. It's also one of the least used to generate leads. But when you think about it, if everybody's going to your About site and checking you out, wouldn't you want to create a way for them to start to engage with you even at that point in time and not just check you out? So maybe you have a link to your blog post or a sign up for a newsletter or just to get more information, but give them an opportunity to do something at that page to show interest and involvement. I told you I was going to show you a picture. Here's the Google Analytics page. That's what it looks like, and there's that behavioral tab. So if you start to go in here, and by the way, when you go and start to go into this, first time you go in, they're going to prompt you to go through a tutorial. I encourage you to do that. So you don't have to try to do it on your own. They will give you tutorials that will help you learn more about Google Analytics. Content marketing. Now, everybody's been talking about content marketing for the last couple of years. It is huge. As I told you, people like to buy. They don't like to be sold. So people are doing more and more of their own investigation to learn about things, finding knowledge on the internet. And so using the content marketing as a tactic to be able to develop business, start writing your own blog posts and actually continue to write on a regular basis. If you're going to do it, you could try it once a month, but I think you want to do it on a frequent enough basis, maybe twice a month, so that people get used to seeing your posts. Weekly would be even better. Now you can take your posts and then repackage them, as I said, into some sort of a downloadable guide. It becomes bait for you to offer to people who do come to your site and want to learn more about getting a commercial deal. There's also what's referred to as a Netflix content binge model. And this is where, and you've seen this all the time probably in articles, where there's links embedded in the articles, or there are links after the article's over. I'm an Eagles fan. I was on an article about the Eagles and what's going on with Carson Wentz right now. And man, I must have ended up reading 6 articles because of links that were embedded in them or after them. And that's the whole idea, is to keep people engaged. And then repurposing your blogs. If you're writing a blog post that's being posted on your site, you can take that content, repost it into your LinkedIn posts or creating infographics off of that. And for those of you that are not necessarily really big writers, or you find yourself challenged like myself, you can use something like these resources that I have on the page there, contentwriters.com, freelancer.com, Fiverr, and Content Development Pros. These are all great sites. You can get people to write for you, and it's not all that expensive, believe it or not. So let's recap this real quick. You get the push tactics, right? So you're going to reach out to your residential clients, for those of you that are in the residential side, and find out who's got commercial properties or who would like to get a commercial property. Remember, you've done doctors and dentists and lawyers and people like that who have professions. They may be leasing space. They might want to own a building and turn that into a nice investment for themselves as well as a location for their business. And be sure to ask for referrals, as I mentioned earlier. Segment your database so that you can start sending targeted messages, not one-size-fits-all messages. So you're actually getting those people to start to understand that you know what's on their mind and what they're looking for. And then creating the Facebook lookalike ads. Again, this might be a little bit advanced for some people, but I think it's a great way to start utilizing other tactics to get after prospects in your area. On the pull side, pull tactics, publishing content on LinkedIn, we talked about that, or actually anywhere that you can start getting things published and out there as an authority, subject matter authority figure is a good idea. But also, remember that about page. Start working on your about page, and you get to create a way for them to connect at your about page, not waiting for them to get further into your website. And what's that next step? Whatever you do, whatever you write, whatever you post, make sure you're creating links that get them to move to another step in your funnel, get them a little bit closer to you, get more information from you, but it also tells you who's interested and who's engaged. All right. Juan, I think you are up, my man.
All right. Well, thanks a lot, Ski. Great job, as usual. This kind of information is usually one of our more popular topics as folks look to drive business for themselves. So marketing is great. So, Ski, thanks a lot again.
My pleasure.
All right, so let's get started. We want to talk a little bit about our products before we end the show today. So the idea is, for you guys to get an understanding of what we do, what's our sweet spot, and what do we really have success with. So let's begin with saying, we are considered an alternate solution to the banks. We are typically positioned, when you're talking about terms and just in general underwriting and our philosophy in lending, we're positioned between banks and private money, hard money, with more resemblance to what a bank does as far as terms and some of the underwriting than your typical short-term, high-interest rate private hard money lenders. So that's where we exist in the spectrum. So, we are the original small balance experts. Back in 2003 when we first started, Silver Hill and Interbay were pretty much the market leaders in this space. So we know small balance commercial loans. These days the small balance terminology is being used also to define the agency product, which Fannie and Freddie does, which is the multifamily exclusively that product. But we are the original small balance experts. We started this long ago, and we relaunched our program in 2016. And, just to highlight, where we are, we're doing loans in the sixes, which is just above, your typical bank loan, and right in line with SBA financing as well. But, we do things a little differently. We have some flexible underwriting that we do, and we can close a lot faster than the banks will. So when does it make sense? When is it a good time to put your client with one of our products? So, again, since we are an alternative, we do stuff that the banks won't. One of the main things is cash out. Most banks, commercial banks, local banks, community banks, credit unions, they will not typically underwrite a cash out transaction. They like to do either purchase or rate and term. And so about 50% of our business that we see in this space is cash out. So rather than going with a high interest rate business loan for working capital, inventory, even to cover payroll or to create new investments, it makes a lot of sense to use a commercial mortgage with a company like us, as making it a more financially stable strategy to get that working capital, the 50,000, the 100,000, just for new investments. So we are very good at doing cash out loans. Borrowers who are applying for SBA loans at a bank, a lot of the banks, they want stable property, they want stable businesses for at least 24 months. We have a bank statement program that really targets these folks. These are owner-occupied businesses. Most of the time, they are, small business owners that own their own shops, whether it's automotive, restaurants, daycares, or just your typical barber shop, salon, any different kind of retail type properties that is run by a small business owner. Our bank statement program, the idea is to be an alternative to that bank financing or the SBA. We do a lot of loans as well where folks are coming off of a short-term bridge or private money, hard money loan. So they're in the 10 to 12 range and they want to go back down and get a 6%, 7% rate, and they're just not ready to go to a bank. So, we do permanent financing instead of bridge necessarily, and so that becomes a viable alternative for folks to come off of those short-term, high-interest rate loans. Tax returns. Banks will only do loans on a global cash flow basis. Using tax returns, we do have programs where we do not rely on them. So we have a Lite Doc program where property income information, obviously bank statements for owner-occupied, we have programs that do not require tax returns. A recently stabilized property, we mentioned earlier that a lot of folks buy property, they're fixing them up, for either for investment or to occupy, and the bank just doesn't want to work on those deals. Banks want properties that have been already fixed for at least 12 to 24 months. More commonly will be 24 months. Finally, seasoning on title and out-of-state investors. Again, banks want the owner or the sponsor or borrower requesting the loan to have been in the property for some time. We don't require that. And out-of-state investors, banks do not like. Banks want an investor or a business owner to be in the same general area that the property they're financing is in. So we are a wholesale business. Probably about 95% of our business comes from our broker clients. So we're dedicated to our brokers. It's a wholesale business since the very beginning in 2003 when we started. We have different types of options for compensation, but there are some scenarios where up to 5 points can be earned. Silver Hill does not charge origination points like banks would or other lenders do. We just have fees at closing. So it's very important to note that all the compensation goes to our brokers. We're a servicing company as well. We keep these loans long term. So on the origination part, we rather our clients make the bulk of the income. So at a glance, just to, kind of big picture who we are, what we do. We're looking at loans between $250,000 and $2 million is our core. We can go up to $5 million and as low as $1 million on a case by case. But generally, the range, the sweet spot is that $250,000 to $2 million. We recently lowered our rates. Rates as low as 6.375. We're pricing loans with 1 point yield spread in the 6.5 to 6.75 territory. So very aggressive, given the fact that most banks, if a broker takes a loan to a bank, they really can't make yield spread. So given our rates where they are closer to the banks, and given the fact that we offer yield spread, it's a very, very competitive product, and the value proposition is you can get your borrower a low rate and still make yield spread on the back. 30-year amortizations, again, beats the bank all the time. Our payments are just smaller because of that. And they are fully amortizing loans. We do ARMs, adjustable rate mortgages. They're considered hybrid ARMs because they're fixed initially and then they adjust once a year. But they're fully amortizing loans, which are different from the bank, who offers a balloon. So as you're selling to borrowers, the comparison is, hey, do you want a deal with the bank at 20 years and 10-year balloon or 5-year balloon? Or do you want a 30-year amortized loan that's going to be there forever, it doesn't have a call provision, no balloon, and you're going to have a fixed rate for as long a time as you would at a bank, so the rate's going to be a little bit higher in the bank, but, when you look at the payment at 30 years compared to 20 or 25, it's a lot better. Again, cash outs is half of our pipeline. We're very popular for that. And finally, LTVs up to 80%. We can do loans up to 80% so long as they work on a cash flow basis. The minimum credit score is 650. We don't really do rural markets, so the top 200 MSAs is what we look for. And again, our borrowers have to be U.S. citizens or permanent resident aliens. This is our guarantors. Borrowers can be entities, and then foreign nationals. We since our loans are full recourse to the borrowers, foreign nationals are not allowed at this point. So what kind of properties do we do? Because we talked about how much you can make. We talked about the kind of products that we have. Now, what kind of properties do we finance? Generally, we finance a wide variety of commercial property, including automotive, which is very popular out there for small business owners, restaurants, daycares, bars. Our most common is the typical multifamily 5+ unit apartment building. We are also doing 1 to 4 investor properties, which is one of the more popular products out there, one of the more popular investments out there as well. A lot of people are buying properties, either fix and flip, which we don't do, or fix and hold. They're buying a property to hold it long term in a rental portfolio. So we will definitely take a look at those as well. But as you can see, a wide variety of property types that we can do. Now, let's talk about in the next slide what we cannot do. So, oftentimes as a broker, you're going to get loans that are turned down at other, banks. People are going to come to you and say, hey, I went to the bank, they turned it down. I went to another lender, they turned it down. Some of these properties we can't do either, for different reasons. So raw land and agricultural properties, working farms, lots of acreage, that's not something that we're going to look at. New construction, and I would add rehab to that. New construction or rehab, we do not do as well. That is also a very limited amount of lenders that will do that, so we stay away from those. Environmentally sensitive properties, any property where there's environmentally sensitive materials being used or heavy manufacturing that uses environmentally sensitive chemicals, dyes, machine shops that use all kinds of hydraulic oils and stuff like that, we will stay away from those as well. Typically, you're going to see problems with light industrial, warehouses, or automotive when it comes to environmental issues. Churches, lots of people ask about churches. Very few lenders in America will do churches. We can have a church as a tenant as long as it doesn't exceed 40% of the overall occupancy of the property. But for the most part, we'll stay away from churches or your traditional church building. Adult entertainment, the most common that we see is strip clubs, nightclubs, whatever. We will not do those. We have been able to entertain, though, retail shops where there is, adult stuff being sold, for lack of a better word, right? So wherever there's like adult items, we can do those places. We've been able to do them. However, nightclubs, strip clubs, we cannot do. Cannabis related. This is something that's, maybe 3-4 years, ago started to become, more prevalent, especially out west. A lot of folks using warehouses, retail shops, light industrial, all kinds of different properties, offices even, to house cannabis-related businesses. Unfortunately, we cannot do those. So even if it's an office or a strip mall that has a cannabis store or anything else, warehouse, anything else that has cannabis related to it, even if it's just a tenant, we cannot do. So we get a lot of those questions all the time. We talked about rehab and construction. And then finally, special use properties. Marinas, ice skating rinks, golf courses, bowling alleys, theaters, gymnasium. We've seen all these different ones. These are special use properties which are typically designed for only that use. They're not very marketable if the business were to go away. So that's the stuff those are the properties that we do and that we don't do. So finally, our lowest rate solution, again, we lowered interest rates to 6.375 floor, and we can do this on all the products so long as the borrowers can qualify. One item of importance, we do want to see higher credit scores. Typically, we go down to 650, but the better rates are reserved for folks that have 700 plus middle FICO score. And then another thing I want to mention is the minimum debt service, which is 1.15. Typically at banks, you see 1.2, 1.3, 1.35 or higher. Our minimum debt service is lower, and that's why we're able to do a lot of the deals that the banks can't do. We talked about Lite Doc products earlier. We don't need tax returns. A bank does. So we'll do loans, cash outs, 80% LTV as a Lite Doc loan, as long as we can get the required documents, a rent roll, and the property operating statements to understand what the expenses are. For the owner-occupied loans, I mentioned our bank statement program, and we also have a stated owner-occupied program that we can use if the bank statements do not work. So a lot of options without tax returns, better than the bank. And finally, our 1-to-4 program, this is just as competitive as our commercial stuff. On these, we go down to a debt service of 1.0, which is aggressive. There are a lot of investors chasing this business out there today, and we do a fair amount of them as well, albeit it's not our main product, but we end up seeing a lot of these 1-to-4s and close. Oftentimes, we're closing 2 and 3 and 4 properties for the same borrower. So we do see a lot of the same borrowers bringing us 2, 3, and 4 deals when it comes to 1-to-4 loans.
Hey Juan, just a side note there, just to remind everybody, especially the residential people, this goes down to $100,000, and there is no limit. Fannie Mae has a 10 limit for number of financed properties. This has no limit. You do cap the individual investor at 2.5 million with us, but until they hit that, this is a great one for that Fannie Freddie fallout.
Absolutely, totally agree. Finally, we talked about we're doing loans up to $5 million. From 1 to 5 million, we can consider some loans for non-recourse. This is a completely different underwrite. These loans are case by case. We can offer bridge on some of them as well, which is a shorter term loan. But typically, this is permanent financing as well. We just have a non-recourse component for some of the bigger loans. So if you do have loans in the 1 to 5 million range, you can offer non-recourse through our products. So let's look at some examples of closed loans. What we did here is Zach does a great job. We usually pick properties from around the country, stuff that we've been able to close quickly, and finally, what solution we solved. So in this one, I want to bring your attention to a few things. Broker compensation was $17,000, which is great. Looks like they made a point. And again, every deal is different. You can't make 5 points on every deal. In some deals you can make 1 or 2, some deals 2 or 3. The average that we see for all of the loans we close is between 1 and 2 points of compensation. We only charge $3,500. That is a closing fee. That's on the closing statement. We only collect $500 deposit on the front end. But more importantly, the issue we solve for the borrower. Investor wanted to purchase a property that was set to experience sizable vacancy in the next 12 months. For most banks, they will not like that because there's a lot of lease roll in the very near term, and so the income is going to be very challenged, and so potentially our payments will be a problem to make. Nonetheless, we were able to look at it and make some adjustments on the underwriting, and we were able to close the loan. Cocoa Beach, this is more local to us in Florida. This was a cash out. Lender fees were $3,500. Again, the investor here, and we don't have broker comp on this one. Probably got lost somewhere, but I'm sure the broker made 2 to 3 points. The investor wanted to tap into their property's equity, again, using the equity in your property to do, other things, invest in other properties, or for inventory or working capital if you're an owner-occupied business. So they wanted to tap into the equity, but they needed a loan without tax returns, and we were able to do it under a Lite Doc program. So we could do cash out, whether it's full doc or Lite Doc, doesn't matter, and up to 80% as well. North Carolina looks like a strip center, retail. Nice broker commission, $14,000. Again, check out our low fees, very important. We allow you guys to make the compensation, and we're just going to service the loan long term. But the issue, what was the issue? Business owner needed to find an alternative solution after their lender decided to not approve their refinance request. And this happens all the time. Sometimes people are looking at loan maturities where their deal is up and they have to refinance out, or they have a short-term loan that they need to get out of quickly. And so what happened was, a lot of people go to lenders, they go through the process, and then at the end, the lender says, no, we were able to solve this borrower's problem rather quickly when another lender bank said no. All right, time for another poll question.
Hey, Skeet, this is our last poll question for the day. Have you seen these types of scenarios within the past 6 months? I'll give you a little time to answer that one.
I always feel like I want to sing on these breaks like this,
All right, well, I think that's enough time. Ski, it's interesting. Nearly 70% say yes, so even those who aren't currently doing commercial business are actually seeing the deals or the possibilities.
And, just as a little side note on that, we are seeing a tremendous amount of interest because of the residential market is a bit stressed right now. We're seeing a lot of people that are starting to pay attention to the fact that the commercial market has some great opportunities. So I applaud everybody that is on from the residential side looking at this. Okay, Juan, and they want to talk about let's getting these people started.
Yeah, absolutely. So how to get started? One of the extra perks in working with us is we have an alliance program where we're paying additional compensation, yield spread, if you will, directly to the broker, and the yield spread's payable outside of the closing, so it's not on the closing statement. If you close multiple units a month with us, and I mentioned the 1 to 4 resi, we see a lot of those. So if you close extra units a month, you can make extra money as well without affecting the rate. So that's one way to get you motivated to get started. But we're going to talk about the process here in the next slide.
Okay. I think one of the things here, Juan, is, once they get started and we get registered with us and create their account, there's so much we provided for them to be successful. I love the pricing calculator because it gives them an idea of if they can find, if they go in there and put in the type of property, the loan amount, whatever information they have, it's going to give them a rough idea of what the rate is. So that's something that they can then go out and sell. All of the guides that we've created, all the marketing materials are there, videos, webinars that we've recorded like this one that are resident there. There's a ton of information to help you be successful, and we want you to take advantage of that. But I'm going to tell you, one thing we did not put here is we have people who will stand on their head to help you be successful. The regional managers that are responsible for your account are absolutely fantastic in their ability to put deals together. If you're not quite sure, if you're relatively new, they do a lot of hand-holding to help you learn how to do commercial loans. Juan, your thoughts on the next
Totally
step?
agree. I mean, one of the things I want to highlight, too, is the pricing calculator, Ski. I mean, a lot of people use it, and you can get quick pricing without even talking to our folks. No other commercial lender is doing this. So this is not, I'm not going to say it's new to the industry, but it's certainly exclusive to the industry. And I agree. I mean, you call our folks, they're going to do whatever they can to accommodate the loan. They'll structure it with you on the front end. They'll help you understand what competition is out there, and they'll help you sell it, against other products that are out there. So yeah, I agree. Getting into our website, engaging with us through our website and through our pricing calculator, and then eventually with our salespeople on the front end is the first step, and a lot of them share some good stories of other brokers that they've been successful with. We talk about sometimes, like, as a general thing, like how long is it taking you to get a broker to transact? Well, some brokers, some of these guys are talking to people for a year before they transact, only because they don't see the loans, and then we kind of help them market and kind of help them talk through some of the issues in order to drive business for themselves. But we stick with them throughout the way, and they end up coming back to us and doing business. So we're very engaged with our brokers. It's how we make our living, so they're very important to us. And so we're very broker-centered in that way, that we're trying to help folks drive business even for themselves. So I totally agree with you, Ski.
And I know you know this better than I do, but I know some of the regional managers have actually gotten on the phone in a conference call with the client when the brokers had some trouble trying to get a deal closed, to present some ideas to them, to present, perhaps it's, the fact that they're looking at something at the bank, but it's a 20-year amortization, we got a 30. There's so many different things. They're expert at this. Utilize them. I'm going to encourage you, utilize the regional managers as much as possible.
So as I mentioned, you can get started with $500 deposit. This is lowest in the industry. Most lenders out there are going to charge points just to get a loan started, anywhere between half a point, all the way to $5,000. So we see all kinds of ranges. We're the lowest in the market. Only takes $500 commitment to get started with us.
Super. Thank you, Juan. And thank you, everybody that's on the call. I think we have a little bit of time for some questions. Zach, Juan, do you have some questions from the audience?
Yeah, so I wanted to answer a few. Somebody asked about title companies. Do we have to use your title company? We can order title on your behalf, but brokers can order their own title through their own title company. So that's a possibility. I have a couple of deal questions here. If you have a deal that you posted about, I'll have one of our regional managers call you back to go over it. I had a question about licensing for 1 to 4. Generally for licensing commercial loans, it works differently than the residential side. I would always suggest that you guys reach out to the states individually to make sure you get clarity on that. We would never want to offer you incorrect information. And, the licensing piece is a legal topic that we're not experienced enough to answer. Let's see. What types of properties do or don't require phase 1 environmental inspection? Do you generally ask for a standard report if such report is needed? Great question. We actually have a different process. Usually properties that are light industrial, warehouse, or automotive, those are typically where we see the environmental issues come up. We have two different options. We can either insure them through a lender's policy. If the insurer does not accept, then we can do a phase 1 report, which a lot of you may be familiar with. And as long as the phase 1 report comes back clean, we can do a loan. So we do have those two options. Let's see if we have time for another one here. Limited docs on owner-occupied stated program. So if we're doing an owner-occupied stated loan, we will run a business risks report that is from Experian. It's a product that we use. We'll need 5 years of experience, at least 700 plus credit, minimum FICO, and a good score on that business report. So we'll have our regional manager contact you for that question. Ski, that's about it. Do you have anything to add?
No. Thank you so much, Juan. Thank you, Zach, for your assistance in putting all this together. And again, thank all of you for being on. We're really encouraging you to reach out to us and utilize us as a resource to help you do more commercial business in 2019. We look forward to all of you, to working with all of you, and look forward to you on the next webinar as well. Take care. Have a great one.